Hello, good morning, everyone. Thanks very much for joining us today on this Buying a New Build Property in the Netherlands webinar. Taking some time out of your day, this sunny day. It's a bit cold today, but luckily everyone's inside, had the heater on so that we can stay a little bit warm today. Good to know is that today's session will be recorded and it will be shared, not just the presentation, but also the recording of our voices and faces. Most likely will be shared tomorrow already. So if you do have to jump out early, no worries, everything will be recorded and shared with everyone. Let me introduce myself. So my name is Ludo Karelse. I am an expat buying manager in the Amsterdam region, greater Amsterdam region, so to say, so also Zaandam, Almere, Amstelveen, Haarlem, everything that is surrounded by Amsterdam, so to say. I'm from the Netherlands, born and raised, but I have lived in the States for a couple of years as an expat child, actually. So I joined my parents to the United States in 2005 until 2009 from the top of my head. Wonderful experience. So I do know what it's like to settle in a new country and then move back again. I'm a proud father, not a proud father of any children yet, who knows, but I am a proud father of two beautiful cats. So if you guys are lucky, they might jump in front of the screen here and there. I live in a new build in Amsterdam. I'm very happy about that, to say, because especially with the temperatures nowadays, I haven't had my heating on at all, and it's a steady 20 degrees inside. So that is definitely not just saving the environment, some gas and electricity, but also saving my wallet some euros. So that's quite nice. I'm not here by myself. I'm joined here with our mortgage partner, Andrew. Andrew, would you like to introduce yourself?
Sure, Ludo. Thank you for the introduction. So my name is Andrew Aziz. I work for Viisi Mortgages. And so we are a team, quite a large team that can finance properties all over the Netherlands. I've been advising for Viisi for almost 5 years now. I also bought a property last year in 2021. Bought a property actually I got married on a Monday, got the keys to my property on a Wednesday, and then flew on to my honeymoon. So it was quite a hectic period, but it was very nice. Bought a property a bit north from Amsterdam, and happy to answer all the questions that you might have with regards to the mortgage.
Perfect. Thank you very much. Oh, my bad. There you go.
It's all right.
some extra information. There we go. Cool. So, well, we're going to be talking about a few different subjects today. Let's go over them. So first of all, obviously an introduction about myself, but also about EHN. Then some pros and cons of buying a new build or buying an existing build. Obviously some information about the market, the price and costs that are attached to buying a new build property. Good to have an overview of the entire buying process, as it is a little bit different compared to the buying process of buying an existing build property. We'll go over the 5% rule and the guarantee, where to find the listings, and then some financial topics and mortgage information. We'll close off with a Q&A. Good for you guys to know, and that brings me to the second slide. We have our colleague Rick here. Rick is our Q&A expert, so if you guys do have any questions during the webinar, feel free to pop them in the Q&A. I think it's in the bottom right. Rick will be answering them live. If there are any questions that are still unanswered, we'll go over them at the end of the webinar as well. Cool. Expat Housing Network. This is the buying team you're looking at. We also do a bit of rental, but we, the 7 of us, are particularly specialized in the buying side. As you can see, we have people from all over. A few Dutchies, obviously me, Rick, but also Ellen. Then we have 2 ladies from Brazil, Giovanna and Rafaela, and Kimo, who is obviously from the Netherlands, but has Caribbean roots as well. And we have our superstar Alana from Ireland as well. So the majority of us have either lived abroad as an expat or are currently an expat, like Giovanna, Rafaela, and Alana. So like I said, we know what it's like to settle in a new country and to experience that everything can be quite daunting and quite new as well. Cool. some pros and cons when it comes to buying a new build. Well, let's start with the pros because there are definitely a bunch of pros when buying a new build. First of all, when buying a new build project, you are buying a project. So it's not a property that has already been built. 9 out of 10 times, there's a lot of room left to change the layout of the property, to potentially add another bathroom if you have a bunch of kids, or if there's any reason to do so, to add a wine cellar because you are a big fan of wines. There's a lot more room to incorporate your own taste into the property. Well, currently there are very strict rules when it comes to the energy sufficiency of a property. That means that the energy label nowadays will either be an A or an A plus or A++. Well, that is something that I experienced myself. Again, haven't had the heating on the entire winter yet, and it's a steady 20 degrees. So it's a big plus, especially with the current energy prices. Well, the property will just be built, meaning that the maintenance will be limited as well. For the coming years, no huge maintenance like the roof, paint work, structural stuff needs to be done. Of course, there will be some limited maintenance here and there that needs to be done, but nothing that will cost you big chunks of cash, luckily. This is a big one. There's no transfer tax when buying a property or when buying a new build property. So when you're buying a existing build, when ownership is transferred from one person to another, you have to pay tax over that. That is 2%. When buying a new build, you are going to be the first owner, and therefore there is no ownership transfer. So you pay VAT instead of transfer tax, but the VAT is actually already included in the purchase price. So that is a big advantage. There's no appraisal. Well, the bank will take the purchase price as the value of the property. That's going to save you another 800 euros or so when it comes to an appraisal. So these are big things that come into play when buying a new build property, and things to keep in mind. Well, there are a few cons as well. When there are pros, there are also cons. First of all, there's no viewing of the property. That makes sense because you're buying a project. In other words, you're buying something that hasn't been built yet. So obviously you can view the construction site, but that's just going to be a big patch of sand. You're not going to be viewing an apartment, not going to be able to go in and see what you are going to be purchasing. So there's always a small percentage of the unknown, and having to be flexible there, and knowing that the project and the pictures might be a little bit different than the actual realized apartment or property. You'll need a subscription to be able to buy a property, meaning that, of course, everything will be listed on different websites or platforms to buy the property or to advertise the property, but to actually make a shot in being able to purchase the property, you 9 out of 10 times need a subscription to the developer sites or that kind of stuff. So it can be a little bit more, well, there's a little bit more work involved to actually enter the waiting list or anything like that. It takes a bit of time to actually get the keys of the property, generally between 1 to 2 years. Now, why is this? There are two factors here why that is a con. First of all, you have to wait, right? You buy a property today, but you need to wait another 2 years before you can actually enjoy the apartment or property that you bought. But the other side is also, let's say you're renting currently, then you also have to keep paying your rent until the moment that you get the keys. But from the moment that you actually become the owner of the property, you have to start paying your mortgage installments. And the developer and contractors and such will only start building the property from the moment that you become owner of the property. So you will have two costs at the same time, your rent and your mortgage installments. Now, we'll dive into this a little bit deeper a little bit later, but luckily you won't be paying 100% of your mortgage installments directly. But it goes in phases. But at the end, if 90% of your property is finished, you'll be paying 100% of your rent and 90% of your mortgage installments. So keep that in mind when it comes to the amount of savings you have in your pocket. There is, this can be seen as a pro or a con, but there's less negotiation on the price, especially in the current market where it's nice to have some negotiation room when it comes to the purchase price. When buying a new build, what you see is what you get. If it's listed at 500K, you're going to be paying 500K. It won't go down. The nice thing is also that there's no overbidding, so it won't go over either. However, keep in mind you might be buying a property that is completely shell, no bathroom, no kitchen, no floor, no nothing. So it might be that you need to add some more costs on top for the finishing or something like that. Well, this is what I mentioned already. You will most likely have some double costs with the existing housing that you have. Cool. Let's move on to some market information. So first of all, some numbers from last quarter. We see that currently when it comes to new builds, there are around 8,200 properties for sale. This was 6% less than last year. The average house price is almost 500,000 now, so we do see an increase in the pricing, just like we've seen with the existing build. Also, new build prices are going up. This has to do with a few things. Two major things, which is obviously the market that is rising, still more people looking for a property compared to the amount of properties available, but also, and this is a big one when it comes to new builds, the construction material has become more and more expensive, and this is also driving up the costs of new build properties. It typically takes around 1 month to sell a new build property. Apartments go even a little bit quicker than houses, but typically around 30 days. What we see here in the graph is the blue is new build properties and the red line is existing build properties. We see that generally existing or new build properties are a little bit more expensive than existing builds, just because the state of the properties are generally, especially in the Netherlands, where a lot of the properties are very, very old, the new build properties, the state is just much nicer and therefore much more desired. What is very interesting to see here, and that is also has to do with the energy prices that are shooting up, is that we see a dip actually happening in the existing builds. Prices are not decreasing drastically, but they are slowly dipping, especially in like outside of the bigger cities, whereas the new build properties are still on the rise. So when it comes to an investment-wise, new builds has always proven to keep rising, even in times of uncertainty. There we go. So, well, this used to be what is causing the prices to increase. Like I mentioned in the previous slide, prices have been decreasing a little bit on the existing build side. So I still think it's a good idea to share with you guys why the prices have increased in the past. But I'm very curious how that's going to further develop in the coming months or years. But there are a few factors that has caused the prices to increase. First of all, there are a few fiscal benefits. We have an interest rebate in the Netherlands. That means that obviously for the mortgage, you will have an interest rate, but at the end of the year, when doing your annual income taxes, you can actually subtract a certain percentage of your taxes that correlate with the interest that you've paid over a mortgage. So there's an interest rebate there that make it quite more attractive to close off a mortgage, because even though you'll be paying a certain interest at the end of the year, you can subtract a bit of that as well. There are no capital gains in the Netherlands. That means if you make a nice profit on your property after owning it for 5 years, selling it, that profit is going straight into your own pocket. You're not paying any tax over that. So if you either want to use it to go on a 5-year holiday, fantastic, you can do that. Nothing taxed. If you want to put it in a new property or whatever, it's not taxed either. It's all your own money. Interest rate is still rather low. Of course, we've heard a lot of sounds of the interest rates rising. Yes, we did have an interest rate of around 1.5, 1.7%. That was historically low, in my opinion, and maybe Andrew can confirm this, but that is not a sustainable interest rate. Now we're around the 3.5 to 4.5. Still rather on the lower side if you compare it to 10, 15 years ago and compare it to other countries around the Netherlands. We still have a very low interest rate and therefore making money cheap to borrow, so to say. Is that correct, Andrew?
That's correct. Interest rates are actually a bit higher, unfortunately. So they have been increasing quite significantly this year, but they have been dropping the last 6 weeks, every week. So that's, well, some good news, I would say.
Yeah. I'm curious to see where that's going to go eventually and where it's going to stabilize a bit, but let's see. Thanks. Well, the importance of an energy label has increased drastically as well. We see a lot of people also now with existing builds that are, putting up solar panels and that kind of stuff. Just because, if I compare it to my own energy bill, luckily it's a gas-free house, but therefore I do use a little bit more electricity, and my electricity bill has doubled, or the rate has doubled now, which is a drastic increase. Luckily, I don't have to use that much because I have such a high energy label within the property. So that is why, I will, from now on, I was always in love with, the old properties in Amsterdam here, but I found a new love for new build properties also just because of the energy label that is very high. And we see that quite an interesting study, properties with a high energy label, even in existing builds, they haven't been dipping, only the lower energy label existing builds. So pretty cool to see. Then on the other side of the spectrum, rents are ridiculously high at the moment. There have been a lot of new measures put into play to actually make it more difficult for investors to buy properties to immediately rent it out, which is good for new starters on the market that want to buy a property. But it also means that there are going to be less rental properties available because we also need the investors to actually create the rental housing, because the rental housing is going down, or the amount of rental housing is going down, the rents are shooting up as well. And with the amount of properties or rental properties with higher rents are going up, we see more people moving towards a purchase home, and therefore still more demand than offer, really. And that correlates with the last point, the lack of supply. Oh, then we have one more. I mentioned this before. Cost of materials have been going up as well, especially wood has become very, very expensive. Also has been resulting in quite some delays in new build projects as well. And this just creates an increase in the pricing of new projects as well. Let's dive a little bit deeper into the actual price and costs of a new build property. It's a little bit different than when you compare it to an existing build. When you're buying an existing build, a lot of the price that you pay is generally just the purchase price. And then on top of that, you have the kosten-koper in Dutch, which means the purchase cost, so to say. So this is notary, a transfer tax, appraisal, technical inspector, all that kind of stuff. Whereas buying a new build property, it is generally an all-in price. Why do I say generally? Because there might be some extra costs that are attached. But for example, the notary costs when it comes to the transfer deed, that is already included in the purchase price. The registration in the land registry is already included in the purchase price. The VAT on the purchase price is also already included in the purchase price. So everything that has to do with the purchase of the property is included in the purchase price. This also is the purchase agreement, by the way. Now, why do I say everything that has to do with the purchase? Because the purchase itself merely is putting ownership on your name and signing a transfer deed, where in the land registry it's now known that you are the owner. If you do not need a mortgage, then you also do not need a mortgage deed. In other words, you don't need a document where the bank has first right to take over the property if you stop paying your mortgage installments. If you do need a mortgage, you automatically also need a mortgage deed, and therefore this is not included in the purchase price when buying a new build property. Typically around 1,000 euros. So it's not if you're buying a property, it's not an insane cost, but it is something to keep in mind. Something else to keep in mind, and that's what I mentioned earlier as well, there might be some extra costs attached to purchasing the new build property. What do I mean with that? Some properties, they're already completely finished. For example, the one that I bought, it had floors, it had a kitchen, it had a bathroom. I just chose from an ABC package, and that's what I got. You also have quite some properties where they will offer you the shell property, and you still need to arrange the flooring, arrange the kitchen, arrange the bathroom, and that kind of stuff. Well, obviously, this is not included in the purchase price. This is something that needs to be added on top of the purchase price. Now, Andrew will talk about this a little bit later on, but luckily everything that is going to add value onto your property, for example, a kitchen, a bathroom or flooring, can also be added into the mortgage. You don't always have to have it out of pocket, but keep in mind that if the property is listed at 500, you might not at the end of the day only spend 500, but you might be spending a little bit more. An overview of the taxes or the cost that you can expect in general. So, for example, or to start on top, transfer tax. Well, luckily, like we mentioned, when buying a new build, there is no transfer tax. The VAT on the purchase price, that is already included. The registration in the land registry or in the cadastre, that is also included. If you do need a mortgage deed between 600 and 1100 euros. Transfer deed, like I mentioned, again, included in the purchase price. If you're going to need a mortgage, then you're either working with a bank or with an independent mortgage advisor. Well, prices differ between 1,500 euros and around 2,900 euros. If you're working with a real estate agent, they charge typically 1 to 2% of the purchase price. Now, we as Expat Housing Network are, of course, also a real estate agent, but we have chosen to charge a fixed fee. We'll get to that a little bit later, but what you see is what you get also when it comes to our pricing. Now, in some cases, when buying a new build, when buying a new build, you don't need an appraisal, but if you do need an appraisal, for example, for an additional kitchen, bathroom, and that kind of stuff, then you might be spending around 800 to 1,000 euros. But you can assume that this cost is, you can neglect this cost because 9 of 10 times you won't need this. A technical inspector can come and, well, not technically inspect the property because the property doesn't exist yet, but what he can do is technically inspect the technical description. A lot of technicals, but what that means, before we actually purchase a property, we get a bunch of documents. One of the documents is the technical description of the property. So instead of going to the viewing and seeing what the property has, you can actually read this document, and it's 50 pages, and it specifically mentions everything that you can expect in the property. How many electricity sockets you have, where they're located, if you have warm water in the kitchen, which way the door handles move, which way the doors move in general. All that kind of stuff will be mentioned in the technical description. And there are some things, surprisingly enough, for example, there are some kitchens where you don't automatically have warm water and you need to add a little small boiler to actually get warm water. A technical inspector is someone that can really dive into this document and give you advice, or at least flag some red flags to say, hey guys, watch out for this, because there might be some uncertainty about a few factors. So it's not something that is obligated, but something that is advisable. If you're going to be buying such a big project, 49 euros is something that I would say is a no-brainer anyway. Then when getting the keys of the property, so completely at the end, we'll have a final inspection together with the developer and the contractor. It is always nice to have a technical inspector available there as well to just double check everything and make sure that everything has been built up to the standards and how they've mentioned it in the technical description. Again, not something that is obligated though. Now, an interpreter, that is something that is obligated if you do not master the Dutch language. So when going to the notary to sign the transfer deed, the notary, funny enough, has to do everything in Dutch. So has to explain everything Dutch. The document is in Dutch. Well, if you don't speak Dutch, then it can be quite confusing and daunting because it's quite a formal meeting. So an interpreter will be present to translate everything into your native language, typically charges around 250 euros. Unless you have a very unique and special language that you speak, then it might be a little bit more expensive. But if you, again, then master the English language, I would say go for the English one. It's always the cheapest. Well, there are a few obligations that come into play when buying a property in general, even if it's an existing build or a new build. There's no difference when it comes to this obligation. It's having to make a deposit, either a 10% deposit out of pocket. If you don't have the 10% laying around, totally fine, then the bank can make the deposit on your behalf, but they charge you around 250 euros or 1% of the guaranteed amount. We have something in the Netherlands called NHG. in Dutch, nationale hypotheekgarantie, in English, the national mortgage guarantee. This is somewhat of an institution or a system where it works like a insurance, where they say, okay, if anything major happens and you are unable to pay your mortgage installments anymore because of whatever has happened, and you also have to sell the property with a loss. So for example, you bought it at 500, but now the value is actually 400, and you've paid off only, let's say, 25,000 euros of your mortgage, then typically you would end up with a debt of 75,000 euros. In this case, the NHG will say, well, we are going to take over that debt so that you are insured for any losses in that case. You pay a one-time fee of 0.6% of the mortgage amount. Another good benefit of this, because we don't expect any prices to drop that drastically, you will actually also get access to lower interest rates. So there are some hooks and crannies here, because you're only able to use the NHG if you're buying a property up to 405,000 euros. So have a chat with Andrew about it to see if your specific situation meets the criteria of NHG. If you do meet it, I would typically say make use of it, because it's always nice to have. Now we have on the right side a column with the question, is it tax deductible? What you see here, everything that is mortgage related is actually tax deductible. So we're talking mortgage deed, the bank or the mortgage advisor, the potential appraisal that you have, and the entry fee of the NHG. If you were to be buying an existing build and the bank requires you to have a technical inspection, then the technical inspection would also be tax deductible. But in this case, it will not be. Yeah, cool. Then when it comes to the payment terms, this is a little bit different than buying an existing build again, because you pay, typically, or you have two phases, so to say, when buying a new build. First of all, and that happens when you sign the transfer deed, you're going to be paying the price of the land plus the closing fees. Closing fees like mortgage deed, my costs, potentially Andrew's costs, the technical inspectors, anything like that, that will be paid at the signing of the transfer deed, or a day or two before signing the transfer deed. But this is only a percentage of the final costs. Now you have a second part, and this will be put in a building depot, in other words, in the bank account of the notary. And every time a phase is complete of the building, then the developer will send an invoice to the notary, and the notary will pay that invoice by using your money. This goes per phases. So if 10% of the property is finished, then you will be paying 10% of the money that you have in the building depot towards the developer, and therefore also only, in brackets, paying 10% of your mortgage installments at that time. Well, if 20% is done, you'll be paying 20% of your mortgage installments, 30%, 40%, you get it. That's all the way up to 100%. Once 100% is done, then obviously you will get the keys. You can terminate your rent and move into the property. Now, these terms are defined in the purchase agreement, so they can be a little bit different, going from 10% to 35%, and from 35% to 36. It depends a little bit on how the development and how the project works. But this will be arranged together with your bank and the notary and the developer as well. So yeah, good to keep that in mind. The process in general. I'm gonna show you the process from a whole, because I think that it's a little bit easier to have a full overview of how it's going to look like. From left to right, obviously we'll have to start with the search and the subscription. In other words, finding the right property or finding the right project, a project that meets your requirements in the right area, right square meters, right amount of bedrooms, etc., etc. Now, if you find something, you'll subscribe to their webpage or to their newsletter, and at one point you'll show to them you're interested and want to move forward with the process. Well, you'll hear from the selling agent or from the developer. This is when we go to bullet point 2. We'll have a meeting with the selling agent and or the developer. That person will share all the information that is related to the project, everything that we need to know that has impact on our decision making as well. will receive a bunch of documents. They'll send it to you and to me. We'll go over them together. We'll draft up a summarization, things that are good to know. This is potentially also the moment that we have the technical expert come in and review the technical description. There might be some questions that come out of it, some remarks or things that need some further explanation. We might have a second meeting with the selling agent and or developer. If everything is clear, we're still enthusiastic. Andrew has given the green light and said, well, we were able to finance this, then fantastic. We can go ahead and move forward with the signing of the purchase agreement and the building contract. There are two sides. You have one contract that says, okay, we give permission to start, we give permission to start building, plus we are going into a contract that say we are wanting to buy the property. So two documents there. This is also the moment that you can start applying for the mortgage. So this is together with Andrew, where you press the big green button and send all the documents to the mortgage provider to get everything going. You have a cooling off period here. When buying a existing build, this is 3 working days. When buying a new build property, it is one calendar week actually. So a little bit longer to change your mind, pull out of the contract without giving any reason and without having any financial consequences there. Well, this process takes between 4 to 6 weeks, depending a little bit on how busy it is at the mortgage providers, how difficult your situation is, how specific everything is. But we'll at one point get the mortgage approval that says that you have your financing in order. Then it's waiting until we get the hooray letter. Now, what that is, the developer and the seller, they actually have to meet a few requirements before they can actually give you ownership and start building the property. One of those requirements is that they have to have sold at least 70% of the project. So if the project is one apartment building and they are selling 100 properties, then they need to sell at least 70 of them before they can actually move forward. This is to prevent building big projects and then at the end of the day having it empty for 50% or something like that. Another requirement is that obviously the municipality has given all the relevant permits and everything like that. If all the requirements are met, then everyone will receive the hooray letter. In other words, the green light to actually move forward with the rest of the process. This is when we go to the notary to sign the transfer deed, potentially also the mortgage deed. Now, from here on, you are officially owner of the apartment right. The apartment right that doesn't, well, the right exists, but the apartment itself doesn't exist yet. But this is also the moment that the developer, the contractors, etc., start working and start building on the property. Now, this is where we enter into the building works, and typically takes around, let's say, 9 months to 1.5 years before everything is finished. There are a lot of variables there. If we have a very cold winter, there are a lot of days that they are unable to work. We have a lot of wet days, or if well, all the wood that is supposed to come from abroad has delays, etc., etc. So there are a few variables that have impact on the building works, but generally not much longer than 1.5 years. Then we come to the delivery. We'll potentially have the technical inspector come in again to make sure that everything as we expected it to be and everything is as mentioned in the technical description. And then you get the keys of the property and you're able to arrange the move, etc., etc. And that's when the process is finished. Now, you do have a time period of a guarantee, a warranty period, so to say. And that is, I think, where the next slide comes in. The 5% rule and the guarantee. Let's start with the 5% rule. It's a legal right of the buyer. What it is, it's like a deposit or bank guarantee that you have with the loan. What it's for, it's to make sure that the developer, the contractor, finish 100% of the property before actually delivering everything. Sometimes we see that the developer, especially like the last 10 or 5%, they just quickly want to rush everything to, well, pretty much get started on a new project. And that can be a crucial time period where, you know, all the electricals are attached and that kind of stuff. So what we can do as a buyer, we can withhold 5% of the final cash amount that we have in the notary, either by having it in a deposit or by doing it with the bank guarantee. And we keep it with the notary, and we say to the developer, to the seller, or to the contractor, you first need to make sure that everything is finished, and only then you will get the last final amount. Because 9 out of 10 times the final payment is in 10%, while they still need to finish, let's say 5%, but you already make the final 10% payment. Yeah, how that works in here, like I said, so the last 10%, you pay 5% to the builder directly, like you always should. That's your legal obligation, but you also have the legal right to withhold the 5% at the notary's office. When buying an apartment, you can also use this 5% for the common areas, so the elevator and that kind of stuff. Now, if there are any defects after the delivery, we always advise you to don't free up the equal amounts to the defect, but actually, just keep the entire 5% in general, because the interest of the non-payment is a little bit too high there. Now, you also have a guarantee period or a warranty period, so to say. There are a few differences there. You always have your standard contractual guarantee. This is just the 3 months after delivery. And then you have a few factors, for example, the 6 months for any maintenance, 5 years for any hidden defects, and 20 years for major defects. This is always the case, always standard in your purchase agreement, and something that you can always count on. Now, if you have a property or project that is aligned with either of these 3 institutions, either Woningburg, SWK, or Bouwgarant, then, and these work like insurance companies for the developer, but also insurance companies for the buyer. So it's always a big plus if your project is working with any of these corporations, because then you get some extra warranty. Besides the 3 months after delivery, you get a 6 years guarantee, and an additional 10 years on your major defects. Now, there are always within this agreement with the insurance company specific parts that might have shorter guarantee periods or even longer guarantee periods, so it's good to have a look at it. But generally speaking, you will always have extra coverage when working with any of these insurance companies or these institutions. All right, well, after sharing all of this, it might be good to know where we actually can find all these listings. There are a few sources. First of all, we have a website in the Netherlands. It's www.nieuwbouw-nederland.nl. This is like a Funda. You guys probably know Funda, but the Funda specifically for new build properties. Now, nice enough, a majority of the municipalities here in the Netherlands, they also have specific tabs or websites within the website that link to new build projects in that municipality as well. So have a look on the municipality website to see if anything is popping up there. Obviously, the website of the projects itself. Why is this a big one? Well, because you subscribe on those websites, but also because a lot of these projects, they are either part of a bigger project. So, for example, the property that I bought, it's part of an entire neighborhood of new build properties. So if I wouldn't be able to buy this one, I would already be in line, or first in line, or so to say, for another building within the same neighborhood. So that can give you a little bit more room or a little bit more choice within a new build project. But also if they complete this entire neighborhood and this entire project, and they know that there are a bunch of people that are still interested in buying a new build property but weren't able to make it to this project, they will immediately send you all the information for a potential next project that they're going to work on. So you'll be kept in the loop a lot more, and again, therefore, the bigger the chance of actually securing a new build property as well. Well, Funda is going to stay a big one. It doesn't just have existing build properties, but also the new builds. So keep having a look on Funda as well to see if there's anything newly listed, and just subscribe immediately when you see something. And the final thing is something that we can help you with. We obviously have a big network of not just projects, but also selling agents that we know that work a lot only with new build projects, for example. And they sent us a lot of listings prior to the listing actually reaching Funda or the new build website or the municipality website. So that gives us a higher chance of actually being able to secure a property like that. All right, Andrew, up. You are up.
Thanks, Ludo. I know Ludo already discussed some of these differences, but I think it's very important to look at it with an example. Of course, with existing houses, you'll have the purchase cost, so the transfer tax, the appraisal report, and also part of the notary costs. And the market value is determined by an appraisal report. So normally when you have an accepted offer, an appraiser goes to the property and then assesses the valuation. With new construction, there's no transfer tax, so it's vrij op naam, as they call it in Dutch, free by name. So there's no actual transfer, so there's no transfer tax that needs to be paid. But the market value is actually determined by the purchase price plus any additional work that you'd like to do. So if you, for example, go to the next slide, I will give you an example. Let's start on the left-hand side. The purchase price is 500K, so you'll have to pay transfer tax of 2%. So that's 10,000 euro. You have the notary costs, costs for the appraisal report, well, our fee, and of course the fee for Expat Housing Network. Well, as you can see, the total would almost be 519,000 euro. You can only borrow 100% of the market value of the property. So let's assume that's 500K as well, the same as the purchase price, meaning that your own capital that's required is the difference, which is almost 19,000 euro, the 18,700. If we go to the right-hand side, look at the new build. Well, let's say you buy the property for 500K, no transfer tax. A part of the notary cost will be applicable. So only the mortgage deed. And there's no appraisal report, and then our fees are applicable as well. And as you can see, the own capital required here is a bit more than 7,000 euro. So that's quite a nice difference to have. As I said, well, with the existing property, the market value is determined by the appraisal report. With new construction, it's quite simple. Normally you sign the purchase agreement, which is for the ground, but also for the property that will be built. So these costs are taken into consideration, plus any additional work. So as Ludo already said, you have to keep in mind, if you just pay the purchase price, then, well, probably you will not have anything, or a very basic kitchen, a very basic bathroom. So all of these costs needs to be, well, taken into consideration as well. And normally what you have to do is fill in something called a home improvement specification form. And on that form, you're going to state what you're planning to do. So for example, put in a kitchen. Sometimes there are new construction projects without a kitchen. So you have to keep in mind that might be another, well, let's say 10 to 20K, depending on how luxurious you'd like to have your kitchen. To upgrade your bathroom, to put in floors, for example, in the property, which might also come in handy. And all of that you can fill in that home improvement specification form. And the mortgage provider will see that as actual value to the property. So it's just the cost for the ground, the construction, and any additional any additional work you'd like to have is included. And that can be financed in full as well, if your income is high enough, of course, to do that. So always make sure as well, when you have a project, to see, okay, what's included in the total purchase price? Do you already get a kitchen? Is it a quite basic kitchen and need to upgrade it with another 5,000 euro, for example, floors, etc. And normally what we see in practice is that clients need an additional 5 to 10% on top of the purchase price. So always be aware, you might see a price on the project, its website, but you'll need some extra costs. So always make sure to dig into that. This is a very important thing to keep in mind. I think that was also one of the questions. You have to keep in mind that you'll have double housing costs. So you already start paying for the mortgage as soon as the construction period starts. So what normally happens, well, Ludo already mentioned the hooray letter, hooray, the conditions have been met. We'll start construction, everything, and then you actually start paying for the mortgage. Normally the price for the ground is already paid immediately at the notary, and then the remaining amount of the construction is actually divided in specific terms. So they, for example, put in 10 terms and then mentioning, well, every time we hit a new term, we need 10% or 15%, depending on what they're actually building at that moment. Every time you hit a new phase or that new term, you'll be paying more of your, well, eventually monthly payment that you will have. So you start at a lower level with the monthly payment as soon as the construction starts, and then it builds up till the 100% well, monthly payment that you'll have once you get the keys to the property. Well, you don't actually know when which phase or which term will be reached and at what time. So we always advise clients to keep in mind that you'll have to pay 80% of your regular gross monthly payment during the construction period. So if you have a property that will take 2 years, keep in mind that you'll be paying 80% of the new monthly payment besides from your own housing costs. So that could be your mortgage, could be the rent that you're already paying. So it's very important to keep that in mind, and mortgage providers also, well, especially if you already own a property, would already like to see that you have enough savings to bridge that gap as well, normally for a period of a year. So always make sure to check that. There are a few very important things to keep in mind when you look at well, arranging a mortgage, and the conditions that we have to keep in mind as your mortgage advisor. Sometimes you'll see that the construction has already started and that there is construction interest to pay because the constructor already paid certain amounts in advance, and that means that there is a construction interest to be paid. These fees can also be included in the mortgage, and there are a few very important dates to keep in mind as well when you look at arranging one. Well, Ludo already mentioned the legal cooling off period of roughly 1 week. When you sign the purchase agreement, you still have a week to back out if you'd like to. There should also be a financial clause normally. So a financial clause is actually the amount of weeks or months that we need to arrange the mortgage for you. Normally what we see with new construction is that that's 2 months. In practice, we have already arranged that within a few weeks, but it's always nice to have a bit of a longer buffer just in case. And I think the most important one are the suspensive conditions. Normally, when you sign a purchase agreement, you will see that there are suspensive conditions for a certain period. So for example, 6 or 9 months. What are these suspensive conditions? This is actually to, well, protect the constructor, I would say. And it actually means that certain conditions needs to be met before the construction can actually start. So there needs to be, for example, an environmental permit. At least 70% of the properties needs to be sold before the constructor said, okay, we're going to send you the hooray letter and we'll start construction in 2 months, for example. Why is this important? Because the mortgage offer that we apply for needs to be valid long enough to bridge that gap of the suspensive conditions. So if there are suspensive conditions of 6 months, we also need to be sure that we have a mortgage provider that has an offer validity of longer than those 6 months. So we're sure that your mortgage is still valid at that moment. So that's something that we will always keep in mind when you buy the new construction, that when we compare them, that we have an offer validity that's long enough, because if it's not that long, then might be that there are some extension costs applicable. So that's very important to keep in mind, and these might be quite expensive costs. If you buy a property for 600K, that could easily be 1,500 euros for every month of extension that you need. So quite significant. So these are very important dates that we always have to keep in mind when choosing the mortgage provider. Of course, you can always make your own estimations online how much you could borrow, but I think it's always wise to plan in a telephonic appointment with one of our mortgage advisors as well. I've just shared the link in the chat as well, where you can fill in our web form. And when you put in your personal information and what your situation actually is, we can match you with a mortgage advisor that is specialized in your specific condition. Rules about how much you could borrow also change. So for 2023, it will already be different than for this year. So I think it's very important to well, schedule this call. It's free of charge. We walk through everything to make sure that you know exactly how much you could borrow before you sign anything. Back to you, Ludo.
Very important. I agree with that for sure. Cool. Well, let's thanks very much for that, Andrew. Some final tips to go over. Things that we've already mentioned, but I think it's good to summarize a few things because we have bombarded you with a bunch of information here. So first of all, check out double costs, extra works, timing, see if everything is aligned with your expectations, but also with your financial possibilities, and therefore check this with your mortgage advisor. We would say consider a technical review of the documents. Obviously, we as a buying agent or real estate agents will check everything for you, but it can't hurt to have a technical inspector come in and actually check the specifics of the technical description, because it would be a bummer to get a house and at the end of the day open the faucet and only cold water comes out. Check if there's a guarantee from a third party of the builder, so the SKW, Woningborg, or Bouwgarant. See if there are any costs that are not included directly in the purchase price, so calculate the extra works there, the kitchen, the bathroom, the flooring, whatever you want to add there. And then again, have potentially a technical expert come in at the delivery. Cool, our package. So from an Expert Housing Network point of view, we have a bunch of packages that are primarily focused on existing builds. We made a specific package for new builds because, like you saw before, the process is a bit different. So what we do, we just like Andrew has a personal intake free of charge to see what your specific situation is like and well, how we can specifically assist you within your search and within your process. We'll help you with the search. So we'll subscribe to the developers' websites. We'll find properties that might meet your requirements, send them over to you, and then potentially move forward from there. Obviously, you'll have access to a buying consultant, either me or one of my colleagues, to help you within this whole process, be there to hold your hand from A to Z. We'll join you to all the meetings with either sellers or developers, review all the documents that are sent to us. We'll make sure that all the check or the points are met on the checklist that are worth checking. We'll do a price benchmark. Now, normally when buying an existing build, we do a price research, the same as an appraiser is going to do to see what the market value is. However, the purchase price when I'm buying a new build is the market value, so we don't do that. But still, it's nice to know that the developer is not just taking the price out of the air and doing whatever he wants. We want to benchmark the price and see if it's actually is similar to projects that are in the area as well. Now we make the offer on your behalf. If there is any room for negotiation, then we'll help with that as well. We'll review all the legal documents, not just the purchase agreement, but also the transfer deed and the mortgage deed. And then we'll be there for the entire pre-transfer support pretty much. Obviously, we'll also be the accountant party that will book you, the third parties, all the experts, etc., etc. Now, I do want to mention that when buying a new build, every project is different. So the service when buying a new build can also be a little bit different. So there are a lot of variables. Sometimes we need to come in a little bit more. Sometimes there's a little bit more that you can do yourself. But typically, in general, we're there from A to Z to make sure that the process is streamlined and you know what you're buying and happy with what you're buying. Now, our fee is 3,450. That's including VAT. No additional percentages whatsoever. This is just what you're going to be paying. To get started, the deposit is 499. That's the same with all the packages. That is it. Pretty easy. How about you, Andrew?
Thanks, Ludo. So we have a fixed fee as well, which starts from 2,900, let's say. There's no VAT on advisory fees, but it is tax deductible. So you get more than 1,200 euros back on this fee. We're completely independent. So for us, it doesn't really matter which mortgage provider we choose, but at least that we choose something that suits you the best. And we have more than 30 to choose from. We're specialized in expats, so we exactly know at which mortgage providers we can or cannot have it arranged. And I think what's also important is an all-in fee. So we'll also look at a life insurance or disability insurance, especially if you're buying together. This might be very interesting, but all of that is included. We have in-house acceptation. So we actually have a team that already checks all the documents on top of my own check before we put everything through to the mortgage provider. That department is called Smooth Operation for a reason, because we want to make sure that everything is arranged as soon as possible. Not only if you're planning to buy new construction, could also be for existing properties as well. And since we work that efficient, also due to that team of smooth operations, we also have priority lanes with a lot of mortgage providers. So they actually say, well, since you work that efficient, we give you quicker processing times, which especially might come in handy if you're a bit stressed about the mortgage application.
Perfect. Thank you very much. Yeah, very valuable for sure. It makes the whole process a lot more easy if you have someone that is arranging the financing for you, as especially when buying a new build, it can be quite daunting and quite difficult for sure. Nice to have an expert on your side. Cool. Let's get started on the Q&A. I think my colleague Rick has already answered a bunch of questions. Do we still have some questions left, Rick?
Hello guys. Yes, I see one more question coming in. I think Andrew, you just explained, but Ellen is asking, why do you need a mortgage advisor? Don't you just go to the bank for a loan?
Yeah, good question. You could do that, Alan. So that's not a problem. But keep in mind, we compare the whole market. And of course, you have the three large banks, ABN, ING, and the Rabobank. But there are plenty more options to choose from. You have the other companies of banks, insurance companies, foreign investors, foreign banks. So it could be that you just go through your own bank, let's say. But there could also be a lot of mortgage providers that have lower interest rates and better terms and conditions. Normally, people buy a property to stay in it at least for a few years. So even if the advisor fee is lower, you have already regained that due to a lower interest rate and maybe better terms and conditions that suit you better. Sure.
And it's nice to have a consultant on your side as well. I've experienced it myself, and it's very nice to have someone that is merely focused on you and make sure that the process is streamlined there.
Yeah.
Thank you. Ludo, question for you. Can you make an offer based on your mortgage, or can you also include, for example, your own money?
Yeah, you can. Luckily, and it's just a fair question. That's something that we see a lot when buying an existing build. The chances of getting your offer accepted is much larger if you are not relying completely on a third party for financing. So if you can say, well, I'm bringing in 100,000 euros out of own pocket, that will take away any risks from the seller side. But in this case, the financial clause is 9 of 10 times already automatically in the purchase contract, and they just leave it blank, and you can fill in how much financing you need. So generally, we just say put in 100% because that will save you or give you the biggest insurance. So there's no real added benefit to having the financial clause lower than the purchase price. Of course, you can still, if the purchase price is 500 and you have the financial clause of 500, you can still at the end of the day say, but I only need 250, and then you apply for 250 and your mortgage installments are lower, etc., etc. That is always possible. But when buying a new build, there's no real added value of taking out the financial clause or anything like that.
All right, thank you. Then we have a question about ground lease. So can you make about the risk actually? So maybe you can just explain what it is and what the risks are.
Of course. So maybe good to explain first of all what ground lease is. Ground lease was something that was introduced a very long time ago to make housing more affordable. So what they did, instead of buying the house and the ground, you would be paying only for the house and then paying for the ground for the amount of years that you are owner of the property. So instead of paying 100,000 euros for the ground as well, you would be paying 1,000 euros per year for having a property on the ground. If you live there for 10 years, you would only pay 10,000 euros for the ground plus the amount you're paying for the house. So in that case, more affordable. That's how it was presented. I do have to say nowadays it's a very nice income for the municipalities or for the private ground lease holders to get a yearly income based on it. And that's why it's also still the case when buying, especially in Amsterdam, when buying a new build property, it will always be on ground lease. Luckily, there are not many risks attached to it because the municipality cannot say, well, after 10 years, we want to change it, we want to tear down the building and make a hotel building or a commercial or anything like that. The only thing is that yes, you will have a yearly payment that you're paying to the ground lease holder. So that is the biggest downside of it. You still have the exclusive, or you have the right to the exclusive usage of that part of the ground where your property is on. If you want to change your destination, for example, from residential to a bed and breakfast, to a hotel, or to a restaurant, or anything like that, you'll need permission from the municipality to get that permit, but you will also need permission from the ground lease holder to change that as well, because there are terms and conditions that are attached to the ground lease, for example, that you can only use it as a residential or residential property on that ground lease. So yeah, there might be a little bit more difficulty there, but to be honest, 9 out of 10 people that are buying a residential property don't have plans to change it into any commercial or anything like that. So the only downside is that you're going to be paying more on a yearly basis.
Maybe to add from a mortgage point of view, if I may, Ludo and Rick. So normally you see that the leasehold has been, for existing properties, that leasehold has been paid in advance, as it already said. With new construction, you sometimes see that you also pay off the leasehold directly for a period of 50 years. But it could also be that there is a yearly leasehold to be paid, whether that's existing or new construction. If that's the case, that you have to pay a yearly leasehold, it also has an influence on your maximum borrowing capacity. So your leasehold times, your yearly leasehold times 20 is what you could borrow less. So that could be quite significant. You can ask sometimes, also maybe to answer Khalid Hamdi's question, you can sometimes say, with the new construction, I'm going to pay this amount for the purchase price, plus another, for example, 50K to pay it off for a very long period. That could be the case.
Yeah.
Thank you. Yeah, I think you answered those questions already. So thank you for that. Let me see. Yeah, then I have one more question left. I think it's a bit personal, but when do you recommend someone to buy a property?
Yeah, well, from a buy, I'm a little bit biased, of course, because my opinion would say always buy. Now, if you're going to be staying here longer than 3 years, typically it would make sense to buy a property. Because keep in mind, buying a property itself costs money, as we just saw in some previous slides. You have the closing fees. Well, when buying an existing build, it was around 18,000 euros. Yeah, that's 18,000 euros that you're paying directly that you could have also been spending on rent. So if you're staying here for 1 year, it might not make sense to buy, because it would be a lot cheaper to actually move forward with a rental property. But typically you meet a break-even point after 2.5, 3.5 years, let's say. After that, it makes much more sense to have a property or have a purchased property, because at that point, the mortgage payments are obviously split into repayment on your loan and your interest, and then you should see only the interest is money that is thrown down the drain, and the repayments is something that you put back into your bricks. As long as the interest is lower than what the rent would be, it always makes sense in that case to actually move forward with the purchase property after that break-even point, of course. So generally 3 years, I think, is a fair amount. Sometimes lower, sometimes a little bit longer, depends on what kind of purchase price you're looking at as well.
Yeah, thank you. Then we have another question. Does it ever happen that an object is not completed or strongly delayed?
Yes, it does happen. That an object isn't completed doesn't really happen. It happens sometimes that sometimes very, very slim occasions, but that the construction company, for example, goes bankrupt because they don't have their things in order, then it will always be taken over by another contractor. So then a delay has happened. Well, we see now that, for example, wood and things like that is very scarce, and therefore delays are happening. But there's in the contract, the purchase agreement, an X amount of days that a developer can take to complete the project. Now, this is typically like 400 workable days. Keep in mind that 1 year does not have 365 workable days. But if they do not complete the project after the workable days mentioned in the purchase agreement, then they will have to start paying fines and things like that. So they will do their utmost best to, make sure that they finish the project within the mentioned time, and they do have an incentive for it as well. I see that Rick is joining twice. I'll jump in on another question. I see a question from Alan. Can the ground lease price radically change when the ground lease contract gets renewed? That's a fair question. The answer is actually yes, because, well, it depends a little bit on how long the ground lease term is, but if the ground lease term is 100 years, you can imagine that 100 years ago, the value of the ground was much different than the value would be today. So if you were paying 100 euros back then, it might be that you're paying 1,000 euros now. That's an increase of 10 times, which I would consider a radical change. And the differences are quite big in that sense. So that's why I always advise you to request the municipality to offer you a perpetual amount, in other words, an everlasting amount, something that you can define today what the amount would be, let's say in 2050, and then it's fixed for the rest of time after that, and then you just know what's going to happen. So if you have a property and the ground lease is going to be changing in 2 years or so, it can't hurt to already contact the municipality to say, hey, can you give me an indication, so that you don't have any big surprises waiting for you. All right, Rick, welcome back. Do you?
Yes, my computer has some issues, but I'm back. I don't know if it's my computer, but I see no questions left.
I see one left from an anonymous attendee. When will the existing house sales or purchase show? I think the question is, well, maybe this person is asking two questions. Either when will it be listed, and when will purchase prices be listed? Well, first, for example, or first when the properties are being listed, generally around 1 year before construction is going to start. Depends a little bit on the project, but yeah, they are working behind the scenes quite a lot before they actually, list the property already. So typically around one year before people go to the notary. Purchase prices are listed in the Netherlands as well, but this happens only after all the transfer deeds are signed and ownership is completely transferred. So yeah, that is a lot further in the future. That is it. Unless there are any other questions, I think we have completed. Let's see. Pressing all the wrong buttons. Okay. So yeah, that's the webinar for today. I don't see any other questions coming in. Thank you very much, Rick, for being here to answer all the questions live. That always saves us a lot of time and is very valuable for our viewers. Thanks very much, Andrew, for being my right hand when it comes to answering all the mortgage questions and giving all the information regarding mortgages.
It's a pleasure as always. Thank you.
Well, you're very welcome. See you next time, of course. And I hope everyone was able to join today, had some gain some information here. If there are any questions left or something that pops up after you close the webinar, don't worry, that's totally fine. You'll receive our information tomorrow. Feel free to schedule an intake call free of charge, and we can discuss your personal situation as well. And then, yeah, for now, stay warm, I would say. All right, guys. Have a good one.
Enjoy lunch, everyone.